Hello everyone, this is Gary Muir, your instructor. This video will discuss your next chapter in our payroll course, the chapter 4, which basically is the federal withholding income tax chapter and how to compute that tax for withholding purposes. I wanted just to kind of point out some of the main areas in the chapter as you go through it. One of the requirements for the test will be to determine what type of wages or what type of benefits are subject to the tax and which ones are not. So I wanted to point out on page 7 of chapter 4, there's a little self-study quiz. And I mentioned, or I put down the answers for this self-study quiz as to what's not taxable. But I also wanted to mention on page, I'm going to jump to that now, page 36 are the self-study quiz answer keys. So try to remember when you're doing the self-studies, and you really should, it's a nice way to kind of judge how you're doing on a certain part of the chapter. Go to the 436. And that will provide you with the answer keys for those questions. Going forward here, I'll just have these for your notes. I'm not going to go through them, but these are the 4 out of the, if I go back to page 7 again. 7 questions or 7 types of benefits. These are the 4 that would not be subject to the tax. Also in chapter 4, they talk about the W-4 on page 12 of your book. The W-4 is to tell the employer basically how much withholding to take out of the paycheck for that person. So they go through that discussion, including on the page 12 also the exempt status. Exempt means they do not take any income tax out. And there are certain requirements, and know those requirements for the test. There'll be some true-false questions on it. It must be filed annually, and it must be done by February 15th. If the form, and also know this for the exam, if the form is not filled out, at that point the employer can withhold at the highest rate, which in this case, the single with 0 exemptions is the highest withholding rate that you can have for an employee. So if you want to have a larger refund, you can claim single and 0, and that will withhold the most that you can. Now on the W-4 itself, and I have a copy of one here, you can also report or have the employer on line 6 take out more than the personal exemption amount or 0, single and 0. So it's up to the individual how much they wish to get on their refund when they file their income tax return. Now there will be some true-false questions, as I said, on the W-4. An employer can have an electronic version that is acceptable. They don't have to be on paper like we show here. And the employer is not required to submit this copy to the IRS unless requested by the IRS. So in my 30 years, I've never had the IRS ever call me up as an employer and say, give me a copy, but they can if they wish to. Also, as an employer, please be aware, do not recommend to your employee. A lot of times employees don't know how to fill out this report, but you cannot legally recommend the number of withholding allowances on this form. They have to just put the amount. You can say single 0 will be the highest withholding amount, but you can't tell them how many to claim on the form. Also be aware with this W-4, you have to claim the number of allowances. Now, with our new tax law, oh, sorry guys, let me get back to the form. We don't have with allowances anymore. However, it's still used in our computations. So even though the tax law on the income tax return has changed, we have not modified this allowance computation for withholding purposes. So it's kind of unusual that this has not been adjusted for the current tax law. Also, if you can claim your spouse and self. And I'm thinking this is another self-study quiz. Yep, this is 4.2. And number 2, oh, no, I guess not. This is not a self-study quiz. This is just another couple questions. Can a spouse and self claim the same number of allowances? And ideally, it should be no, it should not. You can claim yourself and how many allowances you're going to take, and your spouse would do the same. You can't double up on anyone. And then if an employee has more than one employer, cannot and should not claim one for each. If you're the only person, don't claim one again on both employer W-2s, or W-4s, excuse me. Here's the self-study quiz on page 15 of your book. Just more withholding allowance questions here. Employer, you need to get a, what's happened here is Grace has submitted a new form claiming one additional withholding allowance. Kyle also requested to be reimbursed for the over withholding prior to the change. And as an employer, you do not have to give them a refund. They'll get it when they file their personal income tax return. So they'll just have to wait. Number 2 here, it says Bob is upset his paycheck on February 8th has federal income tax withheld, even though he filed a W-4 in 2018, claiming an exemption withholding. What should payroll manager say? You must file a new W-4 claiming exemption by February 15th. Otherwise, the employer has the legal right to withhold at single and zero. And then finally, number 3, Jack decreased the number of allowances on his W-4 on April 4th. How many days does an employer have? And in this case, before that new W-4 kicks in. And the IRS does give an employer quite a few days here to make that change. And then in this case, it's 30 days. And also, as I mentioned, please review that Washington update, which is right on this page. It talks about the income tax changes, not only to personal exemptions, but also to the income tax rates. So they talk about how they were also reduced, at least for a couple of years anyway, for individuals. So make sure you take a look at that as well. And again, I mentioned here on page 436 are the answers to these self-study quizzes. So, going to computations then, just jumping forward to page 22. In this case, it's the gross up of supplemental pay. And in this, what we're looking at is a bonus. This is the example in the book. We want a bonus of $4,000. What wage amount will we have to have in order to get a net pay of $4,000? So here we have basically a division. We're going to take 1, or you could say 100%, minus the FIT tax, which is federal withholding. And again, for FIT, this is the standard 22% is the catch-all for supplemental pay. If you don't want to look up or use the tables, you can just say, hey, I'm going to withhold at 22%, and you have the, as an employer, you have the legal right to do that. We also have the Social Security has to come out of the gross pay. And then finally, HI is the Medicare. Now, there is a possibility you might have a state income tax as well in some of these computations, so don't forget to maybe address that if that is given to you. But in this problem, it's not, so we're only going to have to worry about the federal taxes. So if I look at this, if I take 1 minus all 3 of those tax rates, I will get a net of 0.7035. So if I divide 4,000 by the 0.7035, I get my answer, in this case, $5,685 is what I would have to pay them as gross wages. And then if I subtract all the federal taxes in this case, I would get a net pay of 4,000. So you'll have some practice with these type of questions in your exercises. Be ready for this computation as well on the test. Another computation you'll have to compute in the chapter as well as the exam is the percentage method for federal withholding purposes. So I'm jumping backwards a couple pages to the percentage method. Wilson is the example in 4-2. He gets a semi-monthly $915.60. And on his W-4, he is claiming single and 2. So on his W-4, single person claiming 2 exemptions. Now, I like to present the material in steps just like the author does. So they had us round up this wage amount because it's just cents from the $916. So they had us rounded up to $916. I then have to subtract the number of allowances. In this case, it's 2. But remember, it's a semi-monthly, right? Semi-monthly here, payment. And if you go to your tax tables toward the back, there should be a section, page number T for taxes. And on page T-2, there is a table of allowance values. So the $172.90, which I have over on the right side of my computation, comes from that T2 page. It's the semi-monthly category. Every allowance is worth $172.90. I'm claiming 2, and that gives me $345.80. So I subtract that from his gross pay, get a taxable wage. At that point now, I can use that 570 to go to the tables on T3. This is the percentage method table. So I'm looking for the semi-monthly payroll period. So basically twice a month this individual gets paid. I look on the left side of the table 3 and go down until 570 falls between 551 and 1767. Now you'll notice that he's in the 12% bracket based on this taxable wage for a semi-monthly single person. So at this point it says, if I'm in the 12% bracket, I'm going to pay or withhold $36.70 plus 12% over, oh, wrong table, I was on the wrong table. Table 3 is $39.70 plus 12% over 551. So I'm only going to charge the 12% on the amount over 551, which is only $19, and that gives me $2.30. I add that to the base, the amount of tax up to 551, which is $39.70. Together, we add them and come up with $42 for federal withholding purposes. So these steps, starting with 1, coming up with this allowance amount, subtracting it in step 2 to get the taxable amount of 570, going to the table in step 3, looking up the 12% in this bracket because that's where this person lies, right? At the 12%, the 551 is the wage base over that they have to meet, and that's what's subject to the 12%. And we just simply add the two amounts, the $2.30 and the $39.70 base to get $42. So basically, it goes through that process. You will get practice, like I said, on the percentage method. And the percentage method is mainly used for those high payment personnel that they get a larger wage and they don't fit in the brackets, or if somebody's claiming an unusual number of personal allowances and the tables can't meet those. The tables only go up to 10, and some employees may claim 11 or 12, which is very unusual, but at that point, you'd have to use the percentage method in order to compute their federal withholding. Obviously, your software programs, QuickBooks, Sage, they'll do the percentage method automatically. But we still need to make sure that they're computing right, so we do need to know how they did it, basically. Remember that the tables are easy to get mixed up. I mean, I was looking at the bi-weekly instead of semi-monthly. So be careful when you're looking at your percentages and your amounts. You can have a weekly payroll, you can have a monthly payroll, you can have a bi-weekly and so forth. And also marital status. Make sure you're looking at the single or married. Because the tables, percentage method tables are different, as well as the wage brackets based on marital status. So take your time and make sure you're okay with that. And remember here also that gross pay minus our federal withholding, minus our Social Security, this is employee now, not employer, and Medicare and state withholding gives us our net pay for that particular individual. Unless they have other deductions like child support or health insurance, that might also come out of their paycheck. On page 21, there is, again, more bonus computations. The IRS calls these supplemental wages. So these are amounts that are paid not for work, maybe they're just a bonus of some sort at the end of the year. A lot of cases, employers will give their employees bonuses or a bonus check. And there's really two methods to compute the amount of withholding when that bonus is paid out. So in method A, we basically figure out the federal withholding as if we didn't have the bonus, in this case $985. This person is married in 2, paid semi-monthly, so we have $17 on the $985 wage amount. Well, what would the tax be for a normal pay period with the bonus? So in this case, we add the $500 bonus, and now let's compute the federal withholding at that level, which includes the bonus, which comes up to $67. So the difference between 67 and 17 is the actual bonus then FIT. And that's what we're looking for in this particular case. So this $500 is paid on a separate check. How much do we withhold? And that's one method. The second method is method B, much easier. Most employers will do it this way because it's very simpler. I don't have to compute the tax 2 times. I can just use the federal rate that is a default rate. Just erase that. of 22% for supplemental wages, and that'll be our FIT, in this case, $125. Now, for this individual, again, it's quite a bit different than the $50. However, that computation, this bonus, whatever the case, whichever method you will use, in some cases, the employee will get a bigger refund, at the end of the year when they do file their tax return. It's not that we're taking too much out, it's just that we're just covering ourselves to make sure that the employee is not going to have to pay in at the end of the year, and that's kind of the goal here. Another task in Chapter 4 is to fill out a W-2. This is tedious. It's not hard, but it's just a time-consuming process. This is on page 50. I've used problem 13 as our example here. And I just kind of want to go over how the author is getting some of the numbers here on a typical W-2. Remember, this is a year-end report, and this person is getting $715 per week. Also, deducting $50 a week for a pre-tax 401k plan, and that basically will be reported in box 12A. Also, we have to figure out, based on this wage, we're going to use the bracket tables in, again, Appendix T, or table at the back of the book. We're single and one, so at single and one, a weekly payroll of $715, the federal withholding for that individual is $58. So we have to compute that federal withholding amount in box 2. Now, with this W-2, it's kind of split in half here. We have the wages on the left, the taxes on the right that are withheld from the employee's paycheck. The wages can be different based on the type of tax that we're looking at. In box 1, it's the FIT taxable wages. In boxes 3 and 5, in most cases, they are the same because they're dealing with Social Security and Medicare. They kind of go together. The only time box 3 and 5 would be different is if some individual got over the $128,400 of gross wages for the year. Remember, that's the Social Security wage cap that we learned about in Chapter 3. But anyway, once we have those numbers, we can multiply by the individual rates for Medicare and Social Security to get the tax on the right side in boxes 4 and 6. I already mentioned the pension is a pre-tax of $2,600. Now you'll notice here that if I look at the difference between boxes 3 and box 1, right here, that is the $2,600. Now, the $2,600 pre-tax deduction is a reduction of the FIT tax only. It is not a reduction of Social Security. So that's why there is a smaller amount for this number that goes as far as taxability. Pre-tax means I get a break on my taxes. Well, the only tax I get a break on is my federal withholding income tax. So what we do on the paycheck, we have to do on the W-2, right? And be careful with your problems. When we have a 401k or a simple IRA, those are pre-tax deductions that only reduce, right, the taxability of federal income tax. Also know that in this particular case, We have state information, which is in box 16. We have local in this case, which is a city tax from Philadelphia of 37,180. On boxes 17 and 19 then are the tax boxes for those particular entities, both state and local, in this case city. Finally, in box 14, there are non-payroll related items. Maybe union dues would be one. The author wants us to record the state unemployment insurance of $22.36 in the state of Pennsylvania. And Wisconsin does not have this, but in Pennsylvania, it's a very heavy mining state, so they have in their laws, there's payroll tax laws, that a certain very small percentage of their paycheck is used to pay for state unemployment insurance, just because of the type of industry that is found in that state. So they mentioned that at the very end, state unemployment tax withheld. So that's reported in box 14. It has no effect. It has no effect on any wage amounts that are subject to FIT or subject to Social Security tax or Medicare tax. It's just showing the employee additional information. Now, a lot of times you'll see on your, if you have a W-2, there might be employer contributions to a health savings account or some of those other individual related type things for tax purposes. Just made a note here also that for reporting purposes, this W-2 has to be in the hands or mailed out or electronically submitted to each employee by January 31st. So that's the due date. Okay, I have another example of a W-3, which is basically a summary, right? A summary of all the W-2s together. So that's shown here. I have the totals for problem 13. This is a 941 type employer. There's 6 W-2s on problem 13. So basically, you're supposed to fill out all the W-2s for all 6 employees and total them up. And you'll know that this W-3 form matches, right, the W-2 form. So you just simply add up the 6 employees for each box and put the amount in. What's different here, though, is that group life insurance, in this particular case, there's only one employee that has it, and that is Ford, Kenneth Ford. That person has an employer paid benefit. In this case, the employer paid for group term life insurance that exceeded $50,000. So this is the life insurance paid by the employer, and this is the premium amount that exceeds a normal $50,000 life policy. Again, not too many employers have it, but this one does, and we have to include that. So this $262.75 is added to Ford's W-2, which means now that for federal purposes, that's what this is, these are all Fed, we have to add that or include that in our numbers. You notice that the state and local don't have the group term life insurance added to it. So that is a difference. Also be aware that we had $950 of dependent care benefits. And I'm just looking to see who that was on. Vocal, Ralph. So in this case, this person had dependent care benefits as part of his cafeteria plan, and that too was reported on the W-3 on box 10. And then box 12A again is the summation of everybody's 401k deduction. It's reported in 12A. The rest is basically totals of everybody's W-2, and that's it. It's a cover page. So for the Social Security, and that's what this red copy is, this, along with the W-2 red copies, goes to the Social Security office in that reporting district. Again, this is the paper copy. Most employers now use electronic filing for all reporting purposes. But again, we still have to know how to fill these out. The book then goes to pages 29 through 31. They talk about informational returns that are not for employees, non-employees. One of the biggest ones that you'll encounter is the 1099 miscellaneous. So this is the individual form. And then, like the W-3, there's a 1096, which is the summary of all the 1099s attached to it. So, like the W-2s, on the employee side, we have a W-2 and a W-3 for the summary. On the non-employee side is a 1099 miscellaneous with the 1096. Who gets these type of informational returns? It would be a self-employed. So if you have a vendor that plows out your parking lot for snow and they're self-employed, and you give them greater than $600, right, of cash payments in the year, they are supposed to get a 1099 miscellaneous form. Now, if you have an individual working for your corporation, please be aware if they don't give you a identification number, Social Security number in most cases, you are required then to withhold 24% of their payment for tax purposes or withholding purposes. So that's, again, the general rule. And I also show the form itself where that greater than $600 payment to non-employees, right, those independent contractors, it's called non-employee compensation. So it's in box 7. We also may run into occasions where an employee dies and the last paycheck, which is paid to the state, goes in box 3, and that's why I have the word dead there. There's royalties in box 2. Another very common 1099 report is for rents. A lot of us, or a lot of companies rent to an individual or from an individual their office space, their factory space, their warehouses, and that payment has to be totaled and reported for the IRS. I do talk, the book talks a little bit about with state withholding on pages 32 and 35. So take a look at that. There's not a lot of questions on state, but I wanted to basically go over a couple things for Wisconsin. The Wisconsin Department of Revenue has a WT6 form, and it's a deposit form of the state income tax withheld from employees. The Wisconsin Department of Revenue has different deposit rules. You have different payment types. There's 4. And depending upon how much of tax you are withholding, and as you can see here, the more often or most often dollar amount you have to pay quicker. And semi-monthly means you have to deposit twice a month, or you might be able to deposit monthly if you have less federal withholding, or excuse me, state withholding. So looking at this, if I have a payroll between, I'm looking at the semi-monthly, if I have a payroll that lands between, let's just say March 1st and March 15th, it's due by the March 31st. If I have a payroll that runs between March 16th and the end of the month of March, I have until April 15th to make that deposit. So that's basically how it works on the semi-monthly. The rest of these basically are all the same. If I'm monthly, I have a month to pay it. If I'm quarterly, I still have a month to pay it. If I'm yearly, I have a month to pay it after those periods end. So those are pretty straightforward. That's the WT6, and the WT7 for Wisconsin is the summary. Again, it's the one time every year that I have to submit this form. It goes with the W-2s, actually, that go along with this. And you'll notice that the reporting requirements for the WT7 now, the summary, is I have to get a total of the deposits, the WT6 deposits by quarter. So that's how that works. Again, what the Wisconsin Department of Revenue is making sure that you made your deposits on time. And they're going to look at these 4 deposit numbers to be sure that that's how you paid with those deposits in. And obviously the total and line 5E has to equal the total on your W-2s. So these are very good reconciliation reports to be sure that you're reporting accurately what's on those W-2s for Wisconsin purposes, right? And hopefully you won't have any trouble with that as well. I've also, in Words, typed it out, so these are the WT6 rules. Be also aware that employers and employees should get a certain number of copies. These are following the old rules, but they're still prevalent. Copy A, which is the red, goes to Social Security. Copy 1 is the employer's state copy that should be sent with the WT7. Copy D is for the employer. And B, 2, and C go to the employees. They get 3 copies. So it's just a summary of how the W-2s work. Now, these are old rules. In many cases, you'll get 1 page with multiple copies on it, but that's how it basically works. Finally, to end the discussion here, I again do some true-false questions. I try to, if it's false, tell you why it's false. So take a look at these to help you prepare yourself for the type of true-false questions that you could see on your test. I'm not saying these are all of them. I'm just saying that these are some of them that get you kind of in that mindset of what type of question can be asked. Let me know if you have any questions on any of these as to maybe why it's false, why it's true, what the rates are. You know, you got your flat rate here at 22% on bonuses. But remember, there's also a $1 million rule that if you get a $1 million bonus, not that we're ever going to get one, but then you have to go and change the rate from 22 to 37. So some unique things here. There's some discussion on Roth IRAs compared to normal IRAs or 401k plans or simple IRAs. Remember, a Roth is not a pre-tax. It does not reduce the federal income tax like a simple IRA or a 401k does. So watch for those differences. Again, let me know. if you have any questions on any of these. Even this Archer medical savings account, it's a one paragraph thing in the book, but you might get a true false question on it. I did add some state type questions, not that you're going to see them on chapter 4's exam, but just again, you're going to be probably working in the state of Wisconsin, so you want to be sure you know some of the rules regarding Wisconsin's withholding, what forms are used, when are the requirements, or when are the deposits due. So take a look at these last couple questions regarding state taxes. Couple of minor things. With our two methods of withholding computation, remember we have a percentage method and a wage bracket method. Please be aware, both use tables. Built in the tables are the allowances, right, and the standard deduction. So hopefully you'll see that in the textbook. You can even look in the tables. I mean, percentage, you can see the allowance. And also for the wage bracket tables, you can see that you got to be in the right allowance column. And looking at our personal tax return, we normally would take our gross earnings minus our personal exemptions minus our standard deduction to come up with taxable income. And what we're doing in these tables is trying to match what the employee does with his personal tax return, right? We're subtracting out those deductions to come up with taxable income. The goal here is with any employees to have a zero tax liability at the end of the year. You don't want to be too high with your refund, and you don't want to owe either, so you got to kind of play with the allowances until you get that net tax owed at the end of the year to zero. We certainly don't want to loan the government any money throughout the year unless that's your savings program. That's fine too. All right, on the test for chapter 4, you will be required to do a payroll register. Unlike chapter 3, where we just had the FICA taxes taken out here and here, we're going to now have additional deductions for federal income tax and state income tax. Now the state income tax will be a flat percentage. I'm just putting 2% here. I'm not even sure that's it. But for federal FIT computations, be aware again, there's a couple of employees that will use the percentage method, and the rest will be using the wage bracket method, or the tables, wage bracket table, to find the FIT amounts. Also, part of this test will be computing their regular earnings and overtime earnings, if they are allowed overtime. So you'll take the hours, right, times the rate to get the gross pay. And then if there are overtime hours, times the overtime rate to get that amount. And then we total regular plus OT to get that amount. And the total earnings, obviously, is what we then compute the 0.062 for FICA, for OSDI, 0.0145 for Medicare, based upon total earnings. So be aware that's what you're going to be doing on the exam. There's quite a few points on this. I think there's at least 6 to 7 employees. So it will take some time to compute the regular earnings and the overtime earnings, and then also to figure out the FIT using the number of their marital status, right? And the number of allowances claimed for that particular period. We will give you the hours of pay for each, or hours worked for each in this normal week. So you're going to do a payroll for a register for a week. And basically complete it. Now you can create a Excel worksheet ahead of time, that's okay. If you want to, you can use this heading to help you fill that out. So then you can just pop in the hours maybe and have Excel compute the regular earnings and overtime earnings. It would save you quite a bit of time. Now, be aware there's also a total column at the bottom of this, right? You're going to have total each of these columns if there's an open field. And also, I believe there is an employer and then two of them for OESDI taxes and HI taxes. And here, I would like you to take the, again, gross wages times the rate. Just don't take the amount from the employee withholding. There will be fractional difference, that's fine, but that's what they're looking for the employer side, or the matching of the OESDI and Medicare taxes. So be aware of that computation as well on this payroll register. Okay, that's it for this Chapter 4 review. Again, we give you a lot of practice with the W-2s and W-3s through the homework. There is no W-2 or W-3 on the exam. The main point of this exam is to do some computations of, again, of taxes for bonuses, and then this payroll register is quite a bit of it. So be aware that the W-2 and W-3 will be revisited again when we do your big project for Chapter 7. And you'll have to complete some more there to get you some more practice with those. So, but they're not on the exam. And again, if you have any questions as you're doing your homework, please let me know. Thank you guys. Have a great day.